We're going to recap the US stock markets in under 4 minutes. So fasten your seatbelts. Let's get going. Hi, this is Steve Rumsey, Chief Investment Officer of Optimus Advisory Group, to the leaderboard. So this is where we put small, mid, large, growth value blend, high beta, low volatility, and everything in between so we can do a quick deep dive analysis of what the markets did in the latest 12 and 3-month time periods. So to the board. First off, main benchmark, S&P 500, up 26% for the latest 12 months, carrying over from 2024's strong performance. Very strong still. NASDAQ 100, up similar amount, 26%. This market has been driven by mega cap and mega cap growth stocks, and we continue to see that going forward. But let's get to the top of the leaderboard. S&P 500 momentum, 45% for the latest 12 months, and it did it with only 22% in tech. This is pretty phenomenal. Financial services were 23%. Sister strategy, S&P mid-cap momentum. Same story, only 7% in tech. Did it with 28% industrials and 27% financial services. Well, how about the bottom of the barrel? NASDAQ 100 equal weight. So again, we're waiting to see broadening out of the market. It's still not happening. Equal weight is less than half performance of the NASDAQ 100. So we're still mega cap driven, but we'll see what happens. Let's go to the 3-month time period. Russell mid cap growth, very strong results. We're looking at 13% for 3 months. The S&P was up just over 6% for 3 months, and it did it with 33% technology weighting. Bottom of the barrel for 3 months. S&P 500 high dividend, low volatility. Not the place to be for the latest 3 months. We had a minus 2% for that time period, and it was weighed down by real estate being 20% of the index and utilities at around 16%. So again, it's all about mega cap and mega cap growth driving this market. Okay, so let's go to the relative strength charts. This is where we compare large cap versus small cap to see which one is dominant. So you can see in the graph, small caps from the COVID crash all the way till about spring, March 2021. It was all about small caps versus large caps. And then there was a strong pivot, and it has been large caps ever since. So you can see this drive upward shows the relative strength for large caps is dominant over small caps. So here we are with the second relative strength chart, but this time growth versus value. So what has been dominant? Well, during the COVID crash, it was all about growth. And you can see here plainly, there was a spike up in growth relative to value at this point. Then 2022, the market meltdown, we have value being dominant through that entire time period with a strong pivot, January 2023, growth all over again. And it has been the story since then for the last 2 years plus, and we'll have to see if this continues to be the case. Now we're going to recap the international markets in 3 minutes or less. Let's get to the leaderboard. So first off, S&P 500 up 26% for the latest 12 months. What's that at the top? It's China, 35% gain for the latest 12-month period. Very strong results. Number 3, MSCI World Index. This was up 21%. Well, it's no wonder because 70% of the index is the US market. So that makes total sense. How about at the bottom? Japan only up 6% for the latest 12 months. Had a great year last year, but has been struggling since. How about the latest 3-month period? So MSCI Europe hedged to the US dollar, up 7% during the last 3 months, slightly ahead of the S&P for that 3-month period, but very strong, and it looks like it's got some legs. At the bottom, India had a great year last year. Last 3 months, minus 7%. So this one's really struggling. So let's look at one thing that's very fascinating about this graph behind the scenes. It's technology. So the US market is dominated by the technology sector at 32%. Now, Asia Pacific, which you would think with semiconductors and everything else, is strong. It's at 22% tech. But EFI, which is all of Europe and some other countries, is only 10% tech. And finally, the Europe index is only 9% tech. You can see how the US market is so dominant because of the large pieces of technology and innovation that drives our markets. Okay, now we're going to recap the global bond market. So let's go to the leaderboard again for bonds. AGG up 2%, latest 12-month period. Barclays Aggregate Bond Index near the bottom, so there's lots of opportunities above that. Let's go to the top. Emerging market high yield. This has been very strong. It's 17% for the latest 12 months. Fantastic results. Right underneath that, convertible bonds up 15%. Also very strong results. And number three, nearly 10%. We're going to look at corporate high yield bonds in the US, 9.7% results, very strong. How about near the bottom? Treasuries, down 4% for the latest 12-month period after getting shellacked in 2022. They're still showing no signs of strength, and that's a big loss and very high volatility for that category. And you can look at the difference between that and just being in cash. I mean, cash alone was up over 5%, T-bills, zero risk, and solid results for that. Beat AGG with no risk. So that's pretty interesting. How about the latest 3-month period? Convertibles again, 5% gain for 3 months. Very strong. AGG was flat during that time period. And now at the bottom, again, long-term treasuries not looking really good, not getting any traction, still down 3% for the latest 3-month period. Okay, now let's look at US markets versus international markets for relative strength. So coming out of COVID, you have US markets were dominant going into November 2022. Then there was a sharp turn downwards, which means international markets became dominant over US markets, but it didn't last very long till about Q1 2023. And then we have the US markets pivoting again and heading higher, and it's been that way ever since. Now, how about T-bills versus long-term treasuries? Well, this one's really easy to do because the entire 5-year period has basically been T-bills or short-term government bonds dominating long-term treasuries. Long-term treasuries, you remember, got completely crushed in 2022 and have been very poor performers for a number of years now.